Wall Street edges higher as tech steadies and investors game a possible data blackout. Good evening. U.S. stocks inched higher today as mega-cap tech helped the tape find its footing, while investors braced for two near-term swing factors: the shutdown clock and the risk of a jobs data blackout if agencies go dark. Tonight we unpack why the market is drifting instead of ripping, how a missing payrolls print can alter flows, and what practical signals matter more than the headlines. The S&P 500 and Nasdaq nudged green with broad but shallow participation. Energy cooled after a multi-week run, small caps bobbed on rate path guesses, and defensives saw nibbling as traders kept one eye on Washington. Options markets showed modest implied volatility into week's end, reflecting a market that expects noise, but not a structural shock. "What keeps you from adding risk today?" the reporter asked with an inquisitive tone. "Clarity. If payrolls vanish Friday, we lose a core macro anchor. I do not need hero trades into an information vacuum," the PM replied cautiously. "Why did mega-cap tech hold the line?" the reporter asked, curious. "AI capex and resilient cloud spend. Even in a data gap, the secular story gives investors a place to hide with liquidity," the analyst explained with an analytical tone. "In normal weeks, macro funds triangulate jobs, wages, and participation against inflation and earnings guidance. Kill the Friday print and the market leans harder on proxies, ADP, jobless claims, online postings, and on corporate micro order books, pricing power, and backlog commentary," the narrator explained with an educational tone. "That shifts power to earnings and high-frequency series that are noisier. Expect intraday swings around second-tier data because second-tier becomes first-tier when the main course is missing," the narrator concluded, educating the audience. Sector checks. Tech and semis benefiting from AI infrastructure demand and the AI PC refresh narrative. Financials irate path versus credit quality. Industrials focus on project starts and backlog conversion. Real estate watches bond market behavior. "What are you watching in bonds?" the reporter asked inquisitively. "Term premium and auction demand. If shutdown anxiety pins down front-end yields but long bonds drift on supply concerns, mortgages will not get much relief," the trader explained analytically. Three near-term tripwires are emerging: prolonged shutdown affecting sentiment, sticky long yields impacting high-duration equities and housing, and guidance disappointments affecting market confidence. Playbook for investors, operators, and CFOs, and individuals navigating potential shutdown impacts and data blackout scenarios.